Hi dear traders, I'm Maria Staradub and this is the review of crypto analytics from FxCo. It's the 6th of December today, Tuesday, and it seems that Bitcoin is ready for the next bullish rally, and today we will find out why. We'll have a look at the fundamental background and its technical picture, of course. We'll have a look at the chart for the moment, and in the end we will move on to Ethereum. Okay, let's start with the first article by Artem Petrenko and Bitcoin. So, Artem writes, the Bitcoin reached the 17,300 level and where it ran into 17,300, 600 important resistance level. The total increase in Bitcoin capitalization over the past 7 days was amounted to 6.8%, and the initiative is still on the side of bulls and is supported by fundamental positive. So what's this positive? First of all, easing of Fed's policy, monetary policy, and the decreasing of key rate hike, and approaching Christmas holidays and the so-called Santa Claus rally. The stock market is growing, which is gradually resuming the correlation with Bitcoin. At the same time, there are some negative factors. There are still miners who suffer losses and sell their Bitcoins, but despite this, most of Bitcoin volumes that end up on the market are absorbed by long-term investors. This can be seen from on-chain indicators. What's happening with the correlation between Bitcoin and the stock indices? This question is quite complicated. After the crash of FTX, the correlation was completely broken and reached the level of minus 0.52. Subsequently, the indicator began to recover, and by the end of last week, it reached a level above 0.70. During the weekend, we again see a correlation, and however, Artem says we should not forget that S&P and Bitcoin strengthened the correlation during a downward trend. And given that Bitcoin has crept to a difficult resistance level, there is a reason to believe that it is the cryptocurrency that will repeat the local downward maneuver of the stock index. What's happening on the chart? Let's have a look. Bitcoin is in the final stages of breaking out of the 15,600, 17,500 triangle. It reached a local bottom on November 21st. Bullish activity followed, and it maintains an upward direction for the third week in a row. The cryptocurrency reached the 17,350 level, where it faced increased selling pressure, and up to the level of 18,100, it will face increasing sales volumes. This could provoke a local price pullback, and in order to maintain an upward potential, Bitcoin should hold the 16,700, 900 level. Otherwise, sellers will take advantage and send the price to retest 16,300. As for technical metrics, they point to the continuation of bullish sentiment and the continuation of the upward movement. The RSI remains bullish, though stochastic has reached the overbought zone, which may indicate the need for a local pause. The MACD continues its upward movement towards the zero mark and approaches the green zone, this suggests that a possible bullish peak is yet to come. Given a certain overbought stochastic, we should expect a local price decline before continuing the upward movement. As a result, Artem says, technically investors continue to actively buy the 15,500 bottom, and in the coming days it's important to monitor the dynamics of on-chain indicators of trading volumes and active addresses. If the indicators grow commensurately with the price increase, then this will be a signal of the strengthening of the bullish trend. At the same time, it's always important to understand that the fundamental background can play both for and against the bullish, the upward movements. So it's important to take into account the combination of technical and fundamental factors when actively trading Bitcoin. Okay, let's have a look at the chart for the moment. Okay, today, the 6th of December, and what can you see? Tomorrow, yesterday, Bitcoin was trading above 17,000, about 17,300, 200. Then it went down, and today it opened the day at the point of 17,000 exactly. And now at the moment of the publication, it is trading at 16,975. What can this mean? Well, it still holds the important 16,700, 900 level, though it seems like this is that very local price decline, probably before the continuing of the upward movement. It seems so. Well, and now let's move on to Ethereum. Its technical picture and the article by Sebastian Seligam. Ethereum has made the recent local high at the level of 1,308 in the extremely overbought conditions, so a pullback towards the level of 1,236 was made. Currently, the bulls are again trying to resume the rally, and the intraday technical resistance is located at 1,305, but the next target for bulls is seen at 1,343. We should remember the fact that the Ethereum lost more than 37% in November, and any up move should be considered as the upward correction during the long-term downtrend, Sebastian says. So his trading outlook is the following. The Ethereum market has been seen making lower highs and lower lows since the swing high was made in the middle of August, level of 2,029, and the key technical support for bulls at 1,281 was broken already. A new yearly low was established at 1,074. If the down move will be extended, the next target for bears is located at the level of 1,000. Okay, so let's have a look at the chart of Ethereum for the moment. The trajectory is similar to Bitcoin. Yesterday it was almost at the point of 1,300, and then it went down. It opened today at the point of 1,263, and now it is trading at 1256. Well, so probably the trajectory will be similar to Bitcoin still. We will see. Okay, this is all for today. We'll see each other tomorrow in our next review. I will be glad to see your comments and questions in the section down below. And till next time, see you.